The following is a presentation of TFNN. Live at TFNN, here's Breakout Investing with your host, Ken Shreve.
Well, good afternoon, everyone. Welcome to another edition of Breakout Investing with Ken Shreve. My show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern. You can listen live on your smartphone at tfnn.mobi, and the show is also available at iTunes. I believe I'm also up on Tiger TV on the homepage of tfnn.com. Phone number to use to get through is 877-927-6648. That's 877-927-6648. Give me a call if you have a stock you have a question about, the market. Feel free to give me a call. Don't forget, folks, to test drive my new newsletter launched recently at TFNN.com, Ultimate Growth Stocks, for 2 weeks free. Just go to the homepage of TFNN.com. Right up at the top, there's a newsletter tab. A little drop-down menu comes up, and you can click on investment newsletters, and you can read all about Ultimate Growth Stocks. Very excited to be part of the TFNN family. I have a great guest on the first segment of the show today. I'm going to bring my friend and colleague at realmoney.com, L.A. Little, on in just a couple of minutes. But first, let's take a look at what is going on with this market with a little less than 1 hour to go in the session. Market looks like it's bleeding a little bit. The Dow is down 103 points. That's 0.8% to 12,620. NASDAQ well off its highs, only down 0.1%. That's 2.5 points to 2825, and the S&P 500 down 0.6%. That's about 8.5 points to 1338. Okay, checking gold. June gold settles today down 2.2% to 1481.40 an ounce. Metals continue to be under quite a bit of pressure. We'll talk to L.A. Little about that. Silver, higher margin requirements. That's fueling selling. Silver, the SLV is now down 5 straight sessions, down another 8% today to 36.24. The SLV crashed below its 50-day moving average today. Certainly, you'd have to think that its 200-day line right around 27.50 is in play. So we'll see how that plays out. June crude oil. Not sure this is an official settle, but drops precipitously today, down $9.62 or nearly 9% to 99.82 a barrel. There's kind of good news, bad news there. The lower oil prices mean that we should see lower prices at the pump. I'm sure people were getting pretty sick of $75, $100 fill-ups on their gas tank. But this big drop in oil prices are, over renewed fears about this economy. We saw pretty weak jobless claims data earlier today, of course, ahead of tomorrow's April employment report. Okay, let me bring on L.A. Little. Again, L.A. is a professional trader. He's a money manager. He's a colleague of mine at realmoney.com. We look at the market very similarly. He's a good friend, and he just released a new book this week called Trend Qualification and Trading, available at amazon.com. We'll talk about that in just a little bit. L.A., welcome to the program. How are you?
Fine, Ken.
All right, nice to have you. L.A., before you had a great piece on Real Money just, I believe it was yesterday, called The Silver Dilemma. Before we talk a little bit about what's been happening with silver, why don't we talk about what's going on with this market? Looks like we've got weakness into the close here. Looks like a little sell-off taking shape. You mentioned earlier today that there may be some capitulation in the commodities market. I mean, what's your general take on things here? Are we headed lower still?
Ken, when we were talking earlier this morning, I thought we had the capitulation already taking place, but we're definitely getting some throwing out the babies with the bathwater here at the end.
Yeah, for sure.
So, yeah, do we go lower? I think the equity markets have been actually held up pretty well today, considering what you've seen over in the commodity markets. We are getting some selling here into the close. I don't know that that's going to take us that much lower, but then again, I'm not smart enough to know that for sure. I just follow the trends.
Yeah, exactly. Which is what I do as well. And I'm not, you and I have been bullish for some time. And I think even if we do get a little, intermediate term pullback, this sell in May and go away actually does materialize. I think it's just going to set us up for a nice upward move. I'm a believer in this economy. Of course, we're going to, get some more color on how things look when the jobs report comes out tomorrow. So we'll keep our fingers crossed. But I think, in the universe of stocks that I cover, and I pay a lot of attention to aggressive growth. I mean, there have been very few, breakdowns of the magnitude of silver, for example. A lot of leading stocks continue to hold above key support levels. So, a little bit of profit taking here doesn't mean that we're, immediately going to head lower. That's sort of my take on things. L.A., let's talk a little bit about your piece that appeared yesterday at realmoney.com. It was titled the Silver Dilemma, and right at the beginning of your piece, you asked the question, is this a blow-off top, or is it a pullback that investors are eventually going to be able to make money with? Why don't you just talk a little bit about your what your take was yesterday?
Yeah, Ken, the piece focused on whether the bull run was over, and what I was looking at is on an intermediate and a long-term basis, and I can explain those later, but on those time frames, it looked to me like silver could pull back to 27 to 30 and still be a good buy. I certainly didn't think we were going to get there this quick. At the rate we're going, we'll be there by the end of the week. But the interesting piece is, as I wrote it and was doing the study for it, is that it seemed to me like the real trade wasn't so much just a one-sided trade, but to pair the trade and to go long on your gold and short on the silver when silver actually started moving up again. And I still think that's going to be a good trade, but at this point, it looks like we're going to have to wait a little while before we get a real bounce to take place.
Yeah, I mean it's really tough. I mean the volume in silver in recent days has been incredible, but you'd have to think at some point it's gonna firm up. I mean, do you think, LA, that silver and gold, obviously they're when the dollar is weak, I mean these the metals and oil have continually found a bid. I don't know how much you follow the dollar, but are you in the camp which I know some people are, that we're probably going to see continued weakness in the dollar based on the distinct possibility of QE3, or are you in the camp that this weak dollar story is getting long in the tooth, and it's only a matter of time before we start to see consistent buying in the dollar?
Well, you've got the huge bounce taking place today. Over in Europe, they're not talking up the rates as they were, so the dollar really got a big bounce today, and it's so oversold, and it's been pushed for so long. I was actually trying to trade it. I think I wrote a piece on Monday to trade it from the long side. But to me, that's a trade. That's not a long-term thesis, and I don't think there's times that you can go against the qualified trends and say, okay, I'm going to trade against the trend on a short-term basis or an intermediate or long. But most of the time, you want to go with it. And right now, the trend on all three time frames is very ugly for the dollar. And until you get some sort of firming and it builds a base, I don't think I can be in that camp.
Yeah. No, I hear you. I tend to agree too. So, LA, talking about this, trend qualification. I mean, the title of your new book, congratulations, by the way, trend qualification and trading. Why don't you just talk a little bit about, why you decided to write the book? I believe this is your second book.
Yeah, it is.
A book a while back called Trade with the Little Guys. So, trend qualification and trading is your second book. Why did you feel the need to write it? I mean, what are investors gonna get out of it?
Well, the listeners on this show probably are quite familiar with the idea of swing points and volume expansion, contraction, all those sorts of things, and because I know that Tom O'Brien talks about it a lot.
Yeah, absolutely.
The thoughts that I had and the way I've traded over the last 25, 30 years have always been on volume. I actually started trading in the commodity markets when I was a young guy and cut my teeth there and promptly lost most of my money. But the the ideal that volume is important has always been critical to me in my analysis. And what I finally, the ideals that germinated was that there really is a distinction between trends. They're really not all the same, and there's really a way to tell the difference, and that is the volume expansion contraction when you go over or under a swing point. The key, though, is that those trends, there's about a 6%, with my work, my testing, I'm actually an engineer in a former life, and so my testing, back testing, shows there's about a 6% difference in terms of the strength or the probability of a trend continuing if it's what I call confirmed, in other words, volume expanded over a swing point, versus suspect if it didn't. And you can do that across any time frame. You can look at it on a short-term time frame, and what I ended up doing was creating a systematic approach to determining trend over different time frames. And those time frames are basically 60 bars to a chart, whatever time sequence you want to use, whether it's 10-minute bars, 30-minute bars, daily bars, weekly bars. Put about 60 of them on a chart, and you can pretty much determine the trend.
Mm-hmm.
Given that, then you can say, okay, the trend on the short term is this, suspect or bullish, suspect or confirmed, bullish or bearish, whatever it is, and then you can watch those transitions and decide what the market's really doing.
That's great stuff. So the book is available on Amazon.com. You can just, enter your name, L.A. Little, or the title of the book, Trend Qualification and Trading, so you can check out that book on Amazon. L.A., we've got maybe just about a minute left or so. You had a piece a couple days ago at Real Money talking about some earnings plays and possible retracements. Any particular stock you're looking at right now that could be interesting over the next couple days?
There's a lot of them. Red Hat, for example, this morning was a good entry. So was Polycom. Huntsman, a chemical maker, great entry there. BMC Software broke out today. JDS Uniface looks good. There's a lot of earnings plays that have popped, good volume, solid breakouts. You buy the retraces and you come back to the gaps, and that's the trades right now, and that's where you can probably make the most money.
Well, yeah, you got to be quick on your feet in this market for sure. That's it's a challenging market right now for sure. It's the jobless number. It's pretty wild week to week, but it was a very disappointing number by most indications, and we'll see how the market reacts to the jobs report tomorrow. Hopefully, but there'll be some good news, and some buyers will start to come back into this market. L.A., great to talk with you. Appreciate all the good work you do at Real Money, and thanks so much for coming on the show today.
Oh, Ken, I thank you so much. I appreciate the opportunity. Thanks.
Okay, take care. All right, L.A. Little from realmoney.com. Folks, when we come back, we'll talk a little bit about the retail sales that came out early today. Some really good numbers there. I think there are still reasons to be optimistic about this market. Still cautious, though. We'll be right back, folks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of tfnn.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of tfnn.com or check them out on the American Stock Exchange, symbol GBG.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, folks, welcome back to Breakout Investing with Ken Shreve. I want to thank my colleague L.A. Little once again for coming on the program for the first segment of the show. We're bleeding pretty good into the close here, folks. Unfortunately for the bulls, fortunately for the bears, the Dow is now down 196 points, 1.5%. I mean, there's just a wave of selling that has come into the market over the past few minutes or so. The NASDAQ is now down 0.7%, 20 points to 2808, and the S&P 500 down 1.3%. to 1329. At last check, volume on the NASDAQ and NYSE was tracking pretty close to Wednesday's levels, but the way these losses are going, there's a chance we could see volume come in quite a bit higher, or not quite a bit higher, but just higher than the prior session. So NASDAQ volume yesterday totaled about 2.2 billion shares. Volume on the NYSE yesterday was right around 1.1 billion. So it'd be interesting to see if volume does come in higher. But indexes are bleeding pretty badly here. We talked about weekly jobless claims earlier today. They came in at 474,000. Expectations were for a drop to 400,000, so it was a huge miss. And a very disconcerting number, actually. People will say that weekly jobless claims sort of bounce around each week, and you really want to just pay attention to the 4-week moving average. But bottom line, over the past 4 weeks, claims have been over 400,000, and it wasn't too long ago when the market seemed to be getting comfortable with the fact that claims were going to, start to live underneath the 400,000 level. So this number, 474,000 today, was not a good number to see, especially ahead of a key employment report tomorrow, where job growth is expected to come in around 185,000, with the unemployment rate staying the same at 8.8%. There have been some nice winners today in the market. I'm sure some of these stocks are off their highs, but we saw a lot of actually really good same-store sales data and also first-quarter sales data from many of the nation's retailers. So just to go through some of the winners today, Ross Stores, a very good number. Same-store sales up 10%. From the same month a year ago. Stock is doing very well, up quite a bit, up huge actually. Let's see here, up about 6% to 78.10. Abercrombie and Fitch, another winner. I will put Abercrombie's chart up on the Tiger's Den here, so you can take a look at it. It would be ANF, and Abercrombie had. First quarter same-store sales up 10% year over year. Shares are trading around $73.97, up nearly 5%. There's a very good international growth story going on at Abercrombie. I think this is a really well-run retailer, and you can see a chart of Abercrombie right now in the Tiger's Den, stock that continues to show price strength in the market. So Ross Stores, Abercrombie and Fitch, also limited brands. I mean, there doesn't seem a month or a quarter that goes by where people aren't applauding limited brands for more great sales number. They operate the Victoria's Secret chain, also Bath and Body Works. Limited brands reported good sales. They raised their earnings outlook. Same-store sales were up 20% from a year ago. Really big numbers at limited brands. Shares are recently trading around $40.76, up about 1%. And then some of the department stores were also out with numbers. Macy's, very good numbers. Same-store sales up nearly 11% for April. Shares trading around $26.79, up about 5.5%. Some other gainers during Thursday's session, quite a few of them. We talked about JDS Uniphase yesterday. I still don't think this stock is out of the woods technically, although shares have definitely found a bid in recent days. The numbers were very solid after the close yesterday. We touched on it when I subbed on the Tom O'Brien show yesterday. JDS Uniphase recently trading around $21.95, up about 10% on the day. So really nice quarter from JDS Uniphase, and their outlook was pretty good as well. So the earnings were up 120% from a year ago to 22 cents a share, with sales up 37% year over year to $454 million. Another gainer here, MWI, Veterinary Supply, little known company, but this is exactly the type of company I like to look at. Not really well known, but a pristine balance sheet. Huge move in recent months, but that didn't stop the stock from gaining another 5% today to $83.31. Strong earnings, EPS up 34% to 83 cents a share. Sales up 28% year over year to $367.1 million. So the story of strong earnings reports has been a great one in recent weeks. May not be enough to lift this market further, but the strong earnings reports sure have been great to see. We'll be right back, folks.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at tfnn.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this this new charting software package that we're offering a 30-day, no questions asked money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to tfnn.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40. If you're looking for a unique approach to the market, consisting of a focused discipline, including risk and money management, this book is for you. It'll allow you to take control of your finances. The Art of Timing the Trade is a complete system for making money, protecting profits, and minimizing losses. Go to Amazon.com now and order your copy of The Art of Timing the Trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Hi folks, this is Tom O'Brien. I'd like to thank you for listening and supporting TFNN.com. For this week only, you can make 50% on your money. The Tiger Pass program is back. You can buy up to $1,000 in Tiger dollars. We will add an additional 50% to your account for a total of $1,500. This program is good for all services at TFNN.com. It has no expiration date. Want to make 50% of your money? Go to TFNN.com and order your Tiger Pass dollars now. Thank you folks for listening and for all your support.
Welcome back, folks, to Breakout Investing with Ken Shreve. Another gainer I wanted to talk about today, because it is an intriguing technical picture, is a stock that I actually hadn't heard of before today, a company that came public in 2010 last year called Sufun Holdings, ticker SFUN on the NASDAQ. This stock continues to trade pretty well ahead of earnings on May 11th. It's again, a recent new issue, came public at $11 a share in September 2010. It's a real estate and home furnishing internet portal in China. And, you know, I had Eric Jackson on just recently from Real Money talking about China and how there's still, you know, quite a few interesting growth stories going on in China. And I think Sufun is one of these stories. Again, the reporting earnings on May 11th, they're the latest quarter 3 months ago when they reported, their revenues were up 68% year over year to just under 100 million. Earnings up 33% year over year. Growth prospects are pretty good at this company, and what I like about it is that this is a stock that looks like it's trying to break out, or is actually breaking out from a first stage base, and I think that's compelling when new issues like this are moving higher and could potentially in the early stages of a nice price move here. So Sufun is going to need continued strength in the broad market to help it continue to work. But it's a stock that's working on, I think, 7 straight weekly price gains. It recently broke out over a prior high of around 23.84. Shares are right around $25 a share right now. So very interesting company in China called Sufun Holdings. Wanted to take a look at a couple of decliners today as well. We mentioned some of the bright spots in retail. One not so bright spot in retail was Aeropostale. That's ticker ARO on the New York Stock Exchange. Stock down big today, down about 16% to 21.47. Same store sales down 7% from a year ago. Company also lowered its earnings guidance. So Aeropostale is a stock that has been, in quite a lot of trouble for several months now. It has been a laggard stock in the specialty retailer space, and you've got Abercrombie and Fitch that's executing very well, especially in Europe, and then a similar company, Aeropostale, that's having a tough time. So the stock is down about 16% to 21.47. Another decliner today, Boston Beer. That's ticker SAM on the New York Stock Exchange. I'm going to pull up that chart in the den as well. We'll take a look at SAM. This a former high flyer, a big price gainer last year and before that, but the stock has definitely come upon hard times. The shares were recently trading around 82.81, down about 9%. Still holding above its 200-day moving average. Earnings down 36% from a year ago to 28 cents a share. Revenue growth accelerated from the prior quarter, but that still wasn't good enough for investors. Revenue up 9% to 102.2 million. So that's a look at Sam Adams. You can see a stock that has been performing very well, but right now trading a little bit below its 200-day moving average. So big trouble for Boston Beer on a technical basis. Timberland is another decliner today. Shares down 27% to 30.33. Earnings down 26% from a year ago to 35 cents a share. Sales growth decelerated significantly from the prior quarter, rising 10% to 349 million. This is a story of higher costs, pressure on margins. So Timberland getting a big haircut today, down 27% to approximately 30.33. Let me just answer a question real quick from David White at TFNN. He's asking about this QE3 and what's going to happen when the Fed starts injecting money into this economy. It's a good question. I think that I'm not sure that QE3 is going to be implemented when the Fed, the dollar's going to, I'll tell you what, I'm going to get this question when we come back. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, folks, welcome back. Ken Shreve here, Breakout Investing with Ken Shreve on the TFNN radio network. For those of you in the Tiger's Den, I apologize. I'm trying to, get these charts to work on my laptop, and I'm clicking buttons and trying to get it right for all you folks in there. So that's going to obviously take me a few more shows to get that straight. But I will get better at that. I promise. I wanted to also take a look at the SMH. We talked about Intel yesterday, and Intel has just been a monster performer, continues to look very healthy technically. It recently staged a nice breakout over $22 a share thereabouts. It's currently trading around $23.55, maybe about 5 or 6% past the buying area, but it's just so strong, and the chart is really showing signs of accumulation. So I took a look at the SMH, which is the Semiconductors Holders Trust, which also looks very intriguing right now from a technical perspective. You look at a weekly chart, it's been consolidating gains since February. It's right up near a high, showing price strength. It's even looks like it's outperforming the S&P 500. Shares were recently trading around 36.34. It's probably getting caught a little bit in the NASDAQ downdraft late in the day, but it's really not far from a high of 36.81. I just find it interesting with the selling pressure that has been popping up in the NASDAQ recently to see the chip sector performing so well. And, Intel has a big part to do with that. It is a fairly heavy component in the SMH. And Texas Instruments is a big weighting in that fund as well as Applied Materials. So the SMH is a good example of a weekly chart that I like to target. Just a good base forming here. A breakout isn't out of the question. Now, again, the health of the broad market is certainly in question here, especially ahead of the jobs report tomorrow. But hopefully we see a good number, and the recent selling that we've seen is going to eventually run its course. I've said in recent shows that there is still a fairly significant crop of extended stocks out there, which is a bit problematic. I mean, when I buy a stock for my ultimate growth stock model portfolio, I really want it to it's always best to buy a stock for me when it's coming out of a consolidation phase, and consolidation phases normally occur during a market pullback of some sort, whether it's a 3% pullback, a 5% pullback. Market leaders pause, they digest gains, they form bases, they take a little breather in preparation for another move up. So we really haven't had much consolidation, except, just in the past few days the market started coming in, but it's been a pretty good run the past 6 weeks. So once we do see some new bases start to form, it's going to present me with some very good buying opportunities. So a quick check on the market here. We were weakening into the close. Dow is looking a little better than it was, down 1.2%. That's 153 points to 12,570. The NASDAQ down about 0.5%, 13 points to 2815. And the S&P 500 down about 1%. That's 13 points to 1333. So, yeah, I think the SMH is ironically looks pretty good, with the Nasdaq in a little bit of trouble here. The Semiconductors Holders Trust still looks interesting. There was some data earlier today from International Data Corporation, which is just a trade group. They said that worldwide shipments of PC chips rose 7.4% year over year in the first quarter. They expect 2011 unit shipments to grow 10.3% compared to last year. So fundamentals in the chip space continue to look pretty good. And I own a fast-growing chip maker in my model portfolio currently that's been doing well for quite some time. Speaking of my Ultimate Growth Stocks portfolio, again, I mentioned that a 2-week trial is available at tfnn.com. You'll see me in the left carousel there, or at the top of the homepage. You can get a free trial. But I just once again wanted to kind of go over how I go about picking stocks in the market. First of all, I'm a top-down investor, which means that I pay a lot of attention to price and volume in the market. I kind of let overall market conditions tell me when to be in the market and when to be out. And frankly, I'm kind of in a defensive posture right now. I mean, I'm not making any qualms about that. I have been taking profits here and there in my model portfolio, not finding a whole lot of actionable stuff to work with in terms of new buys, but I'm always looking, and when I feel that the time is right, I will be making new initiations and sending out email alerts, which is a feature of my newsletter and model portfolio. It's updated every Tuesday, a big, expansive weekly update where I kind of give my thoughts on all my holdings, what I'm planning on doing with them, and then in between I send out buy and sell alerts when appropriate. So there are some weeks that are going to be very busy with buy alerts. Other weeks are going to be, busy with sell alerts. Other weeks, there may be an update here or there. But if I'm not seeing much to buy, I'm not going to force the issue buying just for the sake of buying. I use a combination of fundamental and technical analysis when I evaluate a stock, so a strong balance sheet is important to me. I like good earnings and sales growth in recent quarters. I like a consistent track record of annual earnings growth. High return on equity is important to me. I want to see stocks that are being bought by institutional investors. I'm not interested in buying stocks for a model portfolio that are being dumped by institutional investors. So that's basically how I go about looking at the market. I'm going to take a call right now. We've got a little more than a minute left to go in this segment. Let's go to Joe from Boston. Joe, how are you?
Hi, Ken. How are you?
Pretty good, thanks.
Good. Great show. I love it. I just signed up for your newsletter. It's awesome.
Oh, I appreciate it.
So, hey, I just had a general question, and I know we're going into a break, so maybe you could answer this after the break. But I've been an IBD guy for a while, and I know you were there for a long time. And it just seems like lately, the last few months, with the market pulse, they've been really quick to go into market under pressure and then right into a correction. And I didn't know, over your time, have you seen this happen from time to time where they'll kind of flip back and forth really quick without, perhaps breaking the 50 in the market, and, they'll... Can you comment on that at all?
Yeah, I can, and I will comment on it when we come back from break. I will also comment on it a little further. But I think you're right. I think they had decent reasons to change the outlook. I mean, part of me was surprised when I saw the change in outlook last night. Part of me wasn't, but it has been moving around a little bit. I'll comment a little bit more on that when we come back. We'll be right back, folks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40. If you're looking for a unique approach to the market, consisting of a focused discipline, including risk and money management, this book is for you. It'll allow you to take control of your finances. The Art of Timing the Trade is a complete system for making money, protecting profits, and minimizing losses. Go to Amazon.com now and order your copy of The Art of Timing the Trade.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Hi folks, this is Tom O'Brien. I'd like to thank you for listening and supporting TFNN.com. For this week only, you can make 50% on your money. The Tiger Pass program is back. You can buy up to $1,000 in Tiger dollars. We will add an additional 50% to your account for a total of $1,500. This program is good for all services at TFNN.com. It has no expiration date. Want to make 50% of your money? Go to TFNN.com and order your Tiger Pass dollars now. Thank you folks for listening and for all your support.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing with Ken Shreve. So just before we went to break, Joe was on the line from Boston. He was asking about Investors Business Daily's Big Picture column, and they have sort of a market outlook in that column every day that they publish, and it's sort of meant to kind of guide investors through turbulent market times. They'll say that the market is in a correction, which is generally the time where you should be in cash. Other times it will be a market's in an uptrend. confirmed rally, confirmed uptrend, and that's the time to be, putting money to work. So the market outlook has been moving around, but I can't say that I blame IBD. It's been a volatile market. It's been a tough market to read from time to time. I do know that by and large they've done an excellent job. Keeping their finger on the pulse of the market. So in last night's edition, they went to market in correction. I know they noted 4 heavier volume declines in the NYSE composite. Heavier volume declines in the NASDAQ and the S&P 500 have been a little less pronounced. Indices are still holding above support, but I can see the rationale, for shifting the outlook and turning slightly negative on this market. The market leaders have been under quite a bit of pressure. Just earlier this week on Tuesday, we saw some pretty heavy volume selling in the leaders, and some mild distribution in the market. So, it's a tricky time to navigate. But a lot of people read the big picture column every day, and it's still something that I like to look at myself. And the market outlook has been, shifting a little bit, perhaps more so than people are used to. But I can see the reason for Investors Business Daily, changing their outlook in last night's edition. Folks, coming up after the close today, we've got a few earnings reports that I'm going to be interested in. We've got Priceline scheduled to report. Shares were recently trading around 538.69. Up 0.2%. Earnings expected to be up 44% from a year ago to $2.45 a share. Sales up 33% to just under $780 million. So I think there's a pretty good chance we're going to see strong numbers from Priceline, but this is a stock that has made a pretty significant price move in recent months, and the question is, will the results be good enough to fuel another upward move for the stock? Priceline is a very high-quality company, excellent management team. They were able to execute during the recession, showing bottom line and top line growth, and strong growth is expected in this quarter as well. So it'll be interesting to see what Priceline has to say. Also going to be watching for earnings from Visa. After the close, they're expected to earn $1.20 a share versus 96 cents earned in the year-ago quarter. Sales of $2.23 billion should be up about 14% or so from a year ago. So that's what we're going to be looking at in terms of earnings. My next show, Breakout Investing with Ken Shreve, will be next Tuesday. I will also be filling in for Tom on Wednesday for his show, and then another edition of Breakout Investing next Thursday. So, folks, don't forget to check out Tiger Pass on the homepage of tfnn.com. That's running up until Mother's Day. I believe that's May 8th. You can go and you can purchase some Tiger credits for use of any of the premium products at tfnn.com. You buy $500 in credits, and TFNN will give you $250 back. So 50 cents on your dollar to use towards any premium products, newsletters, workshops, that type of deal. So appreciate you listening. Have a great afternoon. Have a great Friday. Hopefully we'll get a good jobs report, and I'll see you back here on Tuesday.